Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning and welcome to The Bigger Picture. Now, the Ministry of Trade and Industry had just released the second quarter GDP advanced estimates. And based on the latest data, Singapore's economy had expanded 4.3% year-on-year in the second quarter of this year, extending the pace of growth in the previous quarter. GDP growth for first quarter was revised upwards to 4.1% from the earlier estimate of 3.9%. And that brings the year-on-year GDP growth for the first half of 2025 to about 4.2%. And to break down the latest of these numbers, we've got Selena Ling, Chief Economist and Head of Treasury Research and Strategy Global Treasury at OCBC Bank, joining us today. Good morning, Selena. How are you doing today?
Good morning. I'm good. Thanks for having me. It's
a pleasure to have you on, and lots of numbers and digits to break down. So let's dive right into it. And it's finally official. We're looking at about 4.2% growth in GDP for the first of this year. Now, that seems fairly encouraging. So let's start with the initial impressions. How much of it did they align with expectations?
Well, it's better than what market expected, but quite close to the 4.1% year-on-year growth that I was forecasting. I think generally we're off to a very good start in the first half, but it may be a story of two halves because the tariffs got pushed back, and so we had a front-loading effects continuing in the second quarter. So that really lifted manufacturing, which came in at a very strong 5.5% year-on-year. But whether the story is going to continue, it all depends on the U.S. administration, right? But the current deadline he's looking at is 1st August. So if 10% tariffs kick in for Singapore and higher tariffs for the rest of the world, we could actually see a bit of a drop-off on the exports and manufacturing front.
Yeah, it does seem like the tariff situation seems to be evolving every now and then. And unlike other ASEAN nations that have been hit with tariff letters, Singapore has not yet received such a letter from US President Donald Trump. But the country still faces the baseline of 10% tariff from the US, even as it runs a trade deficit with the US and has had a free trade agreement since 2004. So how much of the tariffs are being reflected in the latest numbers, do you think?
Well, I don't think the tariffs are really up in a sense yet because they have not been implemented. But generally, because people were trying to get ahead of the tariffs, so all the front-loading effects, really kicked in. That's why we had this big boost to manufacturing in the first half. Whether it's going to drop off from 1st August onwards or if the deadline gets pushed back, well, we have to wait and see. But generally, there is still, this lack of clarity as to the exact tariff policies, that the U.S. administration will actually finally settle on, given all the negotiations that are still ongoing. But at least for Singapore's case, I think no news is good news. It looks like 10% is the baseline.
Yep.
But I think the biggie for Singapore really is not the 10% tariffs, but if we get sectoral tariffs on like semiconductors or pharmaceuticals, right? He talked about 200% tariffs on pharmaceuticals, but the time frame is also, again, fluid.
Right. Thanks for that, Selena. Now then, would you say that this growth was driven more by a genuine pickup in demand or just more of a technical rebound from the first quarter's contraction?
I would say that a lot of it is probably due to domestic demand holding up a little bit better than expected across most of the countries. And they were obviously trying to stockpile a little bit in terms of the exports ahead of the tariff implementation. But I would say that if you look across the sectors outside of manufacturing, actually construction was very resilient. We have a lot of public sector projects that are ongoing. And then on the services side, similar story. Wholesale transport did well because of the unloading story. But we also did see, in the other services sectors, accommodation and some of the others, because of the very healthy visitor inflows that we are getting. So that's also very resilient for now.
All right, thanks for that. Now then, are there any weak spots that stood out to you?
Well, in terms of weak spots, actually, if you look in terms of the quarter-on-quarter momentum, we did get a contraction in the, food services, real estate, and some of the other support services. So I think that's probably a reflection of some of the business confidence hit from all these tariff headlines. So employers are getting a little bit more cautious, and business services may be slowing down a little bit, especially on the professional services side. So the question really is, is it really going to be a story of two halves? The second half, we see a much slower growth momentum compared to the first half. I think that is likely.
Right.
But because of the first half growth, actually we've upgraded a full year growth forecast.
I guess to a certain extent it does support the idea that we can be slightly hopeful towards the end of the year, but remains to be seen. So Selena, now the MTI did not state whether it was maintaining its official growth forecast for the year at 0 to 2%, but said that looking forward, there remains significant uncertainty and downside risks in the global economy for the second half of 2025, given the lack of clarity over the tariff policies of the US. So what sort of momentum are you expecting for the rest of this year? Do you expect, manufacturing to continue holding up?
Well, I think manufacturing may still hold up, in June, possibly into July itself, because the tariff implementation is 1st August. But I think we are due for a slowdown. First half growth was 4.2%. We may come close to, I suspect, stalling speed in the second half growth because of all these tariff implementation, and especially if the threats continue to escalate. I am looking for manufacturing growth to slow quite significantly from the current 5.5% year-on-year growth that we saw in second quarter. But I think for construction and services, construction should still be healthy. Like I said, we have a very healthy pipeline of, T5 and other projects that are ongoing.
Right.
For services, it's going to be very mixed. Those that are more, outwardly oriented, wholesale trade, retail trade, may be more sensitive to headlines. But I think for finance and insurance, demand also for loans may taper a little bit. But generally, I would still say that, full year growth, we could be looking at around 2.1% because first half was already so good. So no official change to the growth forecast of 0 to 2% growth. But we have the MAS monetary policy meeting coming up end of the month. If they wanted to tweak, possibly that's a window for them to do so.
All right, we'll look out for signs for that. Thanks a lot for the breakdown, Selena. Now then, let's shift our attention slightly over to the currency market. And how do you see a weakening US dollar playing out for us here in Singapore then?
Well, the Singapore dollar has benefited from the weaker dollar, just like all the rest of the other Asian currencies. But if you look at it from a trade-weighted basket basis, we are still very strong, on the side of parity because there have been quite a bit of inflows coming in Sing as a safe haven and amidst all these global uncertainties.
Yeah.
I think barring, further downside risks on the inflation side, I suspect that MAS would not be in a rush to ease monetary policy again at the meeting that's coming up end of the month. Given that they have already done so in January and April this year, they may wait to choose, and they may choose to wait and see, mainly because, kind of like in the last 8-day period of the negotiations, over all the tariff situations, so they may want to see whether there's any inflation passed through from the tariff front.
Okay, thanks a lot for that. Now, finally, before I let you go, would there be a data point or trend that you're closely watching as we're heading into the third quarter?
Well, I would really keep my eye on core inflation because core inflation has been very soft in the first 5 months of this year, around 0.6% year on year. But because the base was also quite low in the fourth quarter of last year, I suspect that core inflation may actually edge up from the current levels. So I think given all these tariffs and, worries about some of the inflation passed through to the US side, whether it affects supply chains and, what's happening on the Middle East and crude oil prices as well as OPEC decisions.
Right.
So I suspect that, this is still a very much evolving story. And the central banks would, of course, be very, very cognizant of some of the risks from here, both on the growth and also inflation side.
Wonderful. This has been such a comprehensive story, and thank you so much for breaking down for us everything we need to know about Singapore's latest GDP numbers. Thanks for joining us this morning, Selena.
Thank you.
We've been in conversation with Selena Ling, the Chief Economist and Head of Treasury Research and Strategy Global Treasury at OCBC Bank. Keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.